since even before we started running our algorithms, we actually are a member of Swiss Association of Asset Managers. And literally that means is actually they police us, so that we, you know, as I mentioned, this process actually that you have to do things the right way. And, you know, we're proud that we are actually abiding to those standards. And also it's becoming more and more actually a very unique feature of the flovtec that we proudly mention. We probably mentioned it before, but actually today it's very well accepted. So people are actually happy when we tell them that we actually comply with the highest Swiss regulatory standards and that we will do that going forward. And but it's a small group of companies and entities and exchanges that are that explicitly welcomed it, you know. But I anticipate going forward, it will be the norm. It will be the norm, actually.
Right. So are you actually in the market making side when we're talking about liquid assets, really like a Bitcoin or Ethereum? You don't necessarily need to carry risk on your books, but are you otherwise putting your own capital at risk when it's the more liquid tokens?
So this is a peculiar setup actually on our side, that as we operate on as an asset manager in many of these setups, actually we don't take risk on our balance sheet. Yeah. So we actually, it's usually what we run our managed accounts, if you kind of recall the terminology from the financial markets, where actually the end client is always in full control of the account, which is great for him because he reduces any counterparty risk and he's on control. And formally, we just get trading rights through a power of attorney, which power of attorney is just a document that actually specifies that we can do certain items when it revolves around that account. And it's very efficient setup, and also it reduces a lot of risks for all the counterparties in this matter. And also it fits our narrative and our vision and our values of doing everything in a fully automated way and computerized way. Hence, from a practical perspective, I will say a bit of tech language. We just need the so-called API keys that give us access to the application programming interface, and then the whole infrastructure on our side runs.
Right. Okay. And so if it's a token issuer, you basically run the treasury for them.
Exactly. Yes, exactly. So we manage a small part of the corporate treasury for the purpose of actually delivering the liquidity goals. And to explain like how these liquidity goals work, they revolve around uptime. So it means kind of that you are constantly quoting in the market a spread. Of course, the tighter the spread, you know, the more liquid the asset, and likewise the depth. At which levels, how many levels, and how tight are those levels, and what are the sizes at which we quote. And of course, everything fully automated, computerized, agreed together with the client. And also a client can then provide an input. If they say, I want more liquidity, then you have like the basic liquidity, then the liquidity plus, and, you know, kind of different ways how much liquidity you can provide. So clients can choose that. And likewise, we also proactively approach clients if we notice that the market activity is such that it demands more liquidity or less liquidity. We proactively approach a client and tell them, look, actually there's a need for more liquidity for your particular token. How about, you know, we actually increase the liquidity goals, and then it's up to the client to decide.
Okay. So given your setup, do you offer like a quant trading product? Do you have a quant fund where people can basically give you the money and say, like, just have your algos run on my money?
So yes, additionally, in addition to the market making solutions, we also offer investment products. So actually we were approached by a couple of family offices and professional investors in Switzerland who said, well, you have this amazing infrastructure, low latency trading system, connectivity, algorithms. How about actually we give you capital, and that you can actually manage that capital with your algorithms, but with the pure goal of generating performance. So actually they say, there's a set of algorithms that actually satisfy the liquidity goals, but then you can actually say those algorithms drop the liquidity goals and just are concerned with generating performance like any other quantitative investment strategies. And just recently we have launched an investment product around a month ago, which is an actively managed certificate, kind of quite a typical setup in Europe and in Asia, not so much in US, where we don't target the investors either way. And I'm very happy actually to say that we managed to, within a short time period, raise 1.5 million, and that's actually deployed on some of the world's largest digital asset exchanges where we run our algorithms and generate nice performance for our professional institutional investors.
So I can buy this certificate on the Zurich exchange or so?
Actually, we wanted to make it super simple for the end investors, and literally you can invest through a bank application. If you just Our product has something called an ISIN, which is International Securities Identification Number. And you just type this ISIN in an app or a wealth management app or with a broker, or you tell your bank and you just say the amount and you click the button and it's invested into our product. Quite straightforward and simple, actually.
Cool. I have my follow-up after this conversation.
Yes, happy to follow up on that. Yeah.
Also, your team size, and I don't know if it's current or there are more and some outsourced resources, but the team size on the web page is relatively small. So if you take out the co-founders, you have a quant team and a tech team of 6 people, three quants and 3 IT software engineers, which is a pretty efficient operation.
Yes, I mean, first wanted to say is actually that our technology, our infrastructure and algorithms are actually built on decades of experience. And if you kind of look at the CVs of those people a very great team that I'm proud to have, you have big names there mentioned in their resumes, like some of the world's largest banks, some of the world's largest market makers in the traditional world, and also some of the, in my view, bigger names as well from the digital asset world. And really what my experience is that building a high performance market making infrastructure actually requires really specific skill set that you cannot actually resolve with younger, unexperienced people. And also, so we were very focused. We said, let's just get the best people, a small team, but that has a lot of experience with this and they can build a robust, stable, safe and secure market making solution that just performs exactly as it's expected by the end client. And what we also learned, this was from my experience also from Liquid, that many times building a sophisticated infrastructure is kind of like doing a surgery. You can have 2 surgeons who actually do the surgery, but if you put 10 of them in the room, the 8 of them will still not do anything. They will kind of sit on the side and say, well, it's just the 2 men. If you have highly skilled surgeons, the 2 of them actually do all the work. And I learned that from Liquid actually as well, that we should be very strategic about resources, and especially when it comes to high performance infrastructures. And we therefore chose people with a lot of experience, with a lot of insights, but then be very selective about that team. I hope it makes sense.
It absolutely makes sense. And it's also just another indication that, right, not taking anything away from the value that you're creating, but it is something that's been proven in the traditional markets for a long time. You're now applying it to a new asset class that is expanding rapidly, and you're hopefully riding that wave. But you're not reinventing how trading works.
Exactly. I mean, this is really decades of experience that we're bringing to the table. I do want to point out, I mean, some digital assets are quite unique in their features, but I think if we're talking about the constant here, no matter it's a traditional financial system or the new digital asset world, you need to build a safe, robust, scalable, high performance infrastructure in the core. The core has to be stable. And that was our mission from the first day, exactly as described it.
And so in the traditional markets, it has moved like from the functions and how you trade also to a large component of speed. Have you seen that emerging in the crypto markets or security markets already as well?
I have to say so if I talk about the crypto world, actually we have seen this emerging, and it usually manifests itself with exchanges offering colocation services. So this is kind of like the first step, saying, how can we actually enable the fastest traders to actually be fast? And there's a couple of exchanges actually that offer these colocation services. Many times, unlike in the traditional markets, they're hybrid. And I'll explain why. They're hybrid in a sense that exchanges run their infrastructure in an Amazon data center. And then they actually tell you which Amazon data center it is actually. And then you can collocate pretty much, I'm paraphrasing here, but in the same room. So this is actually how a lot of exchanges are actually doing it, but also certain exchanges as well are actually using traditional service providers there. I think like Equinox is there, and they kind of just deploy their servers there, and then you can collocate as well. So we see this is actually emerging, but I do want to point out here that our now extensive experience with a lot of these exchanges, that they're not built actually as professional trading venues. And we see it actually both from the APIs that use, both from how matching engines are designed. And I can give you a clear example here. A lot of exchanges use so-called REST APIs. REST APIs are in the tech world used if you have a website that needs to stream some data. And obviously, when you're talking about financial markets, you would never use actually something like that. You would use something that's high performance, that is extremely fast, which are either direct data feeds or fixed protocol, but definitely not REST APIs. So we kind of see that these legacy issues from a lot of these big exchanges are still present because they started very early on. And very early on, a slow API was fine. But as we're getting maturing, that will have to change. And the exchanges will change or they will not survive. This is my assessment of that.
So rather than consolidation, it's maybe a maturing of the market that you described, where some of them can keep pace and keep investing and upgrading the infrastructure with the market demands, and some others will just see decreasing volumes and ultimately die.
Yeah, exactly. I think that's a fair assessment. Yeah, that's a very fair assessment. Yeah.
So the other question in the overall market structure, are there still arbitrage opportunities between exchanges, or has that basically disappeared because all the markets are relatively liquid?
So what we see actually that if you kind of look at the top tier exchanges, the arbitrage opportunities are less present, but very much dependent on volatility. So that when the markets go berserk, then those arbitrage opportunities appear, you can capture them. As kind of things get more calmed down, then, you know, I don't think they're a good foundation for a business model of the future. So let's say it like that. But as you kind of pointed out, there's still a lot of other exchanges out there that are slower, that, you know, don't have the infrastructure at the right level, and this is where the opportunities arise. So if I have to kind of describe it, I think if you kind of have to go to the tail end of the distribution in terms of quality of exchanges to find those arbitrage opportunities, which is great because you can capture them, but which is not great because you have huge counterparty risk. Because these are exchanges that can literally, you know, the website is gone the next day, and then you really want to wonder, you know, where are your funds sitting at, you know? And people are aware of it. Just want to say people are aware of it. It's not something not known. Hence, you have service providers now that try to address these problems. And I'm sure you have heard about Coiny, Copper, Fireblocks that kind of try to offer this off-exchange custody and settlement solutions, yeah, and they're kind of trying to address the problem. And I think actually what I just described, that's going to be the future. You're not going to hold assets on an exchange because this is just not how it works. And if you tell to a person in a traditional financial market that your assets are on an exchange, they would even tell you, what do you mean? An exchange is a matching engine. It holds no assets, you know? So I think we need to do that maturity, and that maturity will happen actually in the near term, in my view.